Hey, what's going on guys? It's Will, and in today's video I'm going to give you 3 tips that will hopefully help you to grow your Robinhood account. As you guys can see, I'm up a little bit over 11% on the week, and I hit my daily goal of 10%, so I'm absolutely happy. And yes, it's $750, but the dollar amount isn't everything. I'm shooting for a percentage goal. So I'm going to share with you guys 3 tips, and the first tip that has helped me the most would be to invest in uptrending patterns. So the biggest thing, if you want to look at your account and see that your account is growing and it's an uptrend, wouldn't it make sense that you invest in uptrending patterns? See, that's one thing that beginners struggle with, is they invest in a stock that is going down and they buy with the thought that it could go up, and they don't actually have any confirmation. So what you want to do is, when a stock's going down, you want to wait for that bounce on a support line, or wait for it to find support, and then once you get confirmation that it's at a reversal, then you can buy it and ride some of that trend. The problem with beginners, and I had this issue myself, is just buying before there's any confirmation. So when you invest in an uptrend, you're investing in a stock that is an overall uptrend, and that has momentum. So even if it has an off day, I like to swing trade. So I like to hold positions from anywhere from 3 to 4 days to 2 weeks or even longer. So I do day trades, but for swing trades, when it comes down to investing in a company for a little bit longer period of time than a day trade, you want to make sure that the stock is going up, because when it has that upward direction, if it has an off day, then you can still have a day where, or you can still in the long term get that growth. And investing in uptrends isn't always going to get you the desired result or profits that you want. Everybody knows you're not going to win on every single trade, but that brings us to tip number 2, which is why you want to go into a trade with a trading plan, right? Before you invest in something, just like any skill, before you become an expert or you become good at it, you have to know as much as you possibly can about that subject before you enter that field. It absolutely applies to when you're investing in stocks. So you want to get as much information as you possibly can about a stock before you potentially invest in it. The reason for this is because the more knowledge you have about the stock, the more comfortable you are investing in it, and in the long term, that will help you to grow your account the most, because you're investing based on what you see value in. So for a trading plan, I like to go into a trade with the plan to make 10% profit on that trade. I shoot for 10% profit because I want to make sure that I can cut losses at 2.5% if the trade doesn't go well. So you can cater this to your own percentages, but I like to look for 10% in a stock when I'm investing in it. And the reason for that is because I cut losses at 2.5%, and if I lose a trade, I can lose up to 4 trades, right? 2.5%, 5%, 7.5%, and then 10% is what you lose when you lose 4 trades in a row if you cut losses at 2.5%. So if you win that 5th trade at 10%, then you're then going to make back that money that you had. And I feel this is the 1 in 5 ratio, and this is something that I learned from the book Money Master the Game by Tony Robbins, and he uses it in a more longer period of time, but I've kind of got it on a micro level when it comes down to like trading and investing a little bit more short term in the stock market. So trading plan, make sure you go in with a trading plan, and if you guys want a full video on a trading plan, I also made a video on that. It's having a trading criteria. I'll leave the link to that video down in the description, but one thing you guys should know, so the first tip was uptrends, the second tip was having a trading plan, and then the third thing that you should know is not having the FOMO, the fear of missing out. Because when you have fear of missing out, then you're not buying because you see value in it and you've analyzed it to be a good deal. You're buying because of emotion. Now, you don't want to purchase because of emotion, because when you're doing that, it's not a rational decision. And a trading plan will absolutely help you to keep your emotions out of it, because you know you have this plan and you filter out stocks based on that trading plan. But the third tip, FOMO, fear of missing out, that means when a stock is going up exponentially, so it seems, and you have millions of people investing in it, so it has very high volume, means that it's going to be very volatile. So with a sharp increase, you're going to have just as sharp as a decrease. And it's temporary, and it's not based on the value of a company. It's based on a mass amount of people speculating that it's going to go up. So guys, one thing I would say is don't have the FOMO, don't have the fear of missing out, because when you do, you're going to be investing based on your emotions, and you're going to invest because you have this euphoria in your mind that a stock isn't going to stop going up. Now, it will stop going up, and when it does, it's going to be a sharper decrease because there's such high volume. Now, this is also referred to as pump and dumps, or like quick get rich when you invest in these small, like high volume stocks that are usually at a low price point, a low value. And with that, you just want to make sure that you don't have that FOMO. And having a trading plan and investing in uptrends only will absolutely help you to develop and cultivate your skills to not have a fear of missing out, but invest not based on what your emotions are telling you. Invest based on what you have learned and your eye for value and what you see. Because when you can do that, you have a sustainable trading strategy. So guys, my 3 tips were invest in uptrends, have a trading plan, and don't have the fear of missing out. These tips will absolutely help you to grow your account, and if you can implement them, you'll see a difference in your trading results. Especially when it comes down to having a trading plan, because when you have a trading plan, you're looking at the uptrend, you're looking at the statistics and everything that you analyze, the technicals, the fundamentals, and you're not having a fear of missing out because you're filtering it through your trading plan. So I hope these tips helped you guys. If you want a free book on how to invest using Robinhood and the best practices that you can implement to utilize the tools on Robinhood to essentially profit, then all you guys have to do is click that link in the description. There's a free ebook. You can get it for free right now. All you have to do is enter your name and your email. Thank you guys for watching, and if you have any future suggestions for videos that I should make regarding Robinhood, go down into the comment section and leave a comment about what kind of video you would like to see. If you guys want to see my daily profits on Instagram, I post both my profits and my losses along with some daily doses of inspiration for you guys. And I'd love to collaborate. If you want to follow me on Instagram, link in the description. I really appreciate every single one of you guys, and I'd love to see you in my next video. So subscribe down below. See you.